When life knocks you down, and life will knock you down, try to land on your back. Because if you can look up, you can get up. Welcome to Fire with Dr. Ninja Turtle.
Hi, everybody. Welcome back to Fire with Dr. Ninja Turtle. In the last video, I talked about how the wealthy get rich by spending less. In this video, we're going to talk about taxes because I just filed my taxes. And so we are going to talk about how someone can make $100,000 of income yet pay 0% in taxes. So let's get into it. Paying no federal income taxes may sound impossible, but it is possible if you use the right mix of lowering your Social Security, using dividend income, using a Roth IRA, and using your taxable IRA. A combination of these four items will help you to lower your taxes. And as you know, I'm trying to get down to a 0% tax bracket. This video is inspired by James Canole, who is a CFP on YouTube that I watch. There are other CFPs like Kohorn Financial Group. I watch them on YouTube. And also Jenny Logan. I've actually interviewed her to be my CFP, and this is a video that I will link down below where I interviewed different CFPs. To achieve a tax-free retirement with zero taxes to the federal government, you have to understand how taxes are taxed and what types of taxes are taxed. So we talked about this in a prior video that I did that is titled, Take What the Fed Gives You. And what that means is that comes from Ken McElroy, who says, whatever tax breaks the federal government gives you, use those. And so what that means is W-2 income is the highest income that is taxable. And as you can see, it's taxable from the 0% tax bracket. There is no break in those taxes. What is not taxable at the very bottom is dividend income and investment income. So here's the breakdown. Social Security is only taxable up to 85% of your Social Security. And that is based on what is called your provisional income. And if you watch James Canole's channel, you'll see he goes more into that. Also, qualified dividends up to a certain point have zero taxes. A Roth IRA is zero taxes after you've paid the taxes and then put the money in. Then the fourth part to all of this is you want to strategically take from your taxable IRA where you paid pre-tax in an amount that does not raise you above the 0% tax bracket. So let's look at the tax brackets for W-2 income. It's 10%, it's 12%, it's 22%, and 24%. And it goes higher because I mentioned that it's 37% at the top level when you're making quite a bit of money. But from 0 to 11,600. Now we're talking single filer here. From 0 to 11,600, you're paying a 10% tax. Married individuals filing jointly from 0 to 23,000, they're paying a 10% tax. So every dollar you make, you're paying at least a 10% tax. Let's now look at the long-term capital gains rate, which also includes qualified dividends. So when I say this, it includes investments that you've held for over a year and qualified dividends. So long-term capital gains, for a single person, it is 0% up to $47,025. For a married couple, it's 0% federal taxes up to $94,050. Now, all of this is 2024. So I'm not giving you tax advice for the future. I'm only telling you what the IRS gives you in the past. Now, if you go over the $47,025 as a single person or married filing single, then you're going to go into the 15% bracket. So as you can see, W-2 income is basically the worst income that you can have in the United States. Investment income is the best income that you can have in the United States. And we're going to use investment income and Social Security income in order to get down to a 0% tax bracket. Let's walk through an example of a retired couple. We'll call them Tim and Beth. And they generate $100,000 a year and pay zero in federal income taxes. Social Security, they have $40,000 a year. Now, in my case, if I was to claim at my full retirement age, I would get a little over $40,000. And as you can see in this chart, you can make adjustments with your Roth IRA at the end for any adjustments in your lower Social Security or higher Social Security. So since they make $40,000, their Social Security is taxable low, and so therefore it's 0% is taxed. Qualified dividends and long-term capital gains, they are only getting $30,000 from that. And remember, the threshold is $47,000. So since they stay under the IRS guidelines, this is taxed at 0%. Their taxable pre-tax IRA, they take $20,000 and they pay taxes on that, but it's still at zero because it's not enough to get them up to a tax bracket where they would owe taxes. So it's just enough to keep them down below that 15% tax bracket. Lastly, you would use your Roth IRA, which is 100% tax-free, to make any adjustment that you may need for extra money and still keep you below the 0% tax threshold. And these are the 4 ways that you can use this combination to pay 0% in taxes. I plan to do this using my real estate and using my Roth IRA. That's how I plan in the future to pay 0 taxes, even after I take Social Security. Because I don't have qualified dividends, I can't use this particular strategy that I'm telling you about. What I can do is I can use my Social Security when I take it at 67, and I can use my rental income depreciation, plus I will be using what they call a 1031 tax exchange when I sell my real estate, which will reduce my capital gains down to nothing because you're reinvesting all of your capital gains into a like rental property. So I will be doing that in the future. Now that I am going to go with a certified financial planner that focuses on real estate investors. Also, I'm going to use my Roth to offset my income, so I am maxing out my Roth today. If you found this helpful, please like and subscribe and hit the bell icon so that YouTube will push this video out to more people. The key takeaways from this are to delay your Social Security as long as possible to keep your income low. Also, make strategic investments into tax-advantaged accounts. Also, what you want to do is have qualified distributions that you can take that are in that 0% tax bracket. And lastly, use your Roth IRA to adjust your income to keep you in that 0% tax bracket. If Tim and Beth do all of this, they can earn $100,000 and pay 0 taxes. In the comments, let me know, what is your biggest tax concern? And the quote of the day comes from Albert Einstein, and he says, the hardest thing to understand is the tax code. Remember, never let your past determine your future.